Hey everybody, Jake here with TrendSpider. Hopefully everybody had a good trading week and a good start to November. Wanted to go over the charts, looking at the broad markets and some individual names, kind of seeing how things are playing out into mid-November and go over some things that we've been talking about over the last couple weeks. So if you guys remember from the last couple of videos, we really touched on seasonality going into November. And so if we go to the sidebar widget with seasonality here, you'll see that we were looking at these win rates for November into December since 2016. So if we want to go back since January of 2016, which is pretty much when we finally bottomed from that 2-year consolidation from 2014 to 2016. But also, if you even go back further for more data points since the 2009 bottom, you'll still see that November had that 92% win rate. So we were really starting to break out of these longer term I don't even call them longer term, just previous resistance, all-time highs from September. We finally started breaking out into the end of October, which is never a bearish sign. If you're breaking levels to the upside and you're hitting new all-time highs, that's not bearish. So not only did we have the technicals breaking out, but we also had, going into November, that really strong seasonality, and we've really gone pretty much straight up since we started the month earlier in the week. So one thing that I want to go over is, where can we go from here? Not because we're trying to predict the future, but based on technical analysis and looking at the charts. So SPY, if we're looking at the daily versus the weekly, we simply have this 1.618 extension right around 471, which is really just a function of that September high all the way down to the October 4th low. That's the measured move. And then you've got the 1.618 extension. We did not hit the exact extension. That's why you always want to use these zones. That's why I have this orange rectangle kind of around this main line to take into account some margin of error. And so we did have a little bit of a rough day. We had a solid candle here, which means we closed above Thursday's high, but we closed lower than we opened. And a lot of the time that can be a sign of maybe a little bit of a pullback. Now, keep in mind, we had 2 double whammies last week. This week. I did this video on Saturday, so technically it's still this week. We had the Pfizer pill news come out. A lot of reopening names started to move, but then we also had the infrastructure bill that came out Friday night and was approved and passed. So these are things that you really want to keep in mind. There's a lot of momentum in the market right now. And if you look at the weekly chart for SPY, you'll see that we are still getting into this trend zone above, but notice that there's plenty of room to the upside. I mean, if this really tested the wick to wick resistance above, we could be trading, in the 470s to 480s by the end of the month. We just have to let price action do its thing. Now, one thing that you want to look at on the Qs as well is really this measured move from June. So if you look at this measured move, when we broke out of these previous all-time highs that we put in April, we had our May sell-off, and then we continued up, broke through, and then we pretty much moved up almost for a month straight without any type of significant pullback. Then we finally moved down from around 364 all the way down to 351. Everybody thought the world was ending, and then we continued to just move up from there. So if we really wanted to extend this move all the way to the actual top here, you could be let's delete this and just add a measured move here. I mean, we could be seeing the 420s to the 425s maybe by the end of the year. So as always, you do need pullbacks in order to continue up. You need the market to have these little resets. So I wouldn't be shocked if we have a little bit of a pullback. It would be healthy at this point. But if you look at kind of the longer or medium to longer term here, things do look pretty strong. Now, if you go on the weekly chart here and we look at this measured move, pretty much from September to October once again, that 1.618 extension is right around 402 to 403. And, that would be at a level that a lot of people would be watching as these fibs become pretty self-fulfilling when they are hit. Now, the Qs do have a little less seasonality in November and December. Still, one of the stronger months was 77% win rate, meaning that 77% of the time November closes higher than October. But then December only has a 58% win rate, still above that 50% threshold, but not as strong as your IWM and your SPY. So if we go to IWM, we finally got the move. Congrats to everybody who's been waiting for 10 months. We finally got the move. This main measured move that I'm looking at is pretty much the March high to the March low here. And it's really hard to kind of pick an exact measured move here because there's so many of them within this horizontal level where we've pretty much chopped around. So I'm personally picking this one, but you could probably, do the same for this one right here. The reason why I picked this one is because this was the all-time high. So I'm using the all-time high to that low as the measured move. So, some people may pick this move right here. If I can draw it, like this move around here to here. But I'm just using that all-time high as the top of my measured move, and then that local low around 208 in late March. So if we did continue up, the 1.618 extension is still quite a ways away. It's at 250 to 251 above. And when this thing goes, it goes. I mean, if you look at what happened previously when we broke out, we continued for quite some time. And if we want to kind of look at this previous level of horizontal resistance, these previous all-time highs, we went straight up for multiple months. So if you want to look at this breakout and think, yeah, we made a big move, there's no way we can keep going up, look at the previous price action and you'll see that that's not always the case. We can grind up for quite some time. Now, this 1.618 extension is just the same one that I've measured in the daily. It's just shown on the weekly as kind of a reference point here. But notice the seasonality. November has a 92% win rate. December has a 75% win rate. Two of the strongest months of the year that we're just getting into now. And we've got a lot of solid news to back that move with the Pfizer pill reducing the hospitalizations and deaths from COVID, as well as the infrastructure bill that really hasn't even been priced into the market yet because it came in after hours on Friday, pretty much on Friday night. So those are the broad markets looking very strong, but we always can have those pullbacks along the way. It's healthy. So, don't think we can go straight up, but also don't think that, because the market's, gone up for quite some time, we can't go up higher. You have to look at price and the historical price action to see where we can go. Now, going into BTC and Ethereum real quick, not going to touch on crypto too much because it's not really doing a ton right now. Essentially, all we've got here on Bitcoin is a previous resistance level acting as support over the last couple weeks. And you can see here as well, we've been touching on this chart for a while. Going into the end of the year in December, there's only a 33% win rate since 2014. So take it for what it is. It's a little harder to do seasonality on crypto simply because it just has a mind of its own. And if you remember last December, we absolutely ripped. So just because we have a lower win rate here doesn't necessarily mean we're going to go lower, but just keep in mind that we are having trouble getting through these previous all-time highs. And if we did, then you'd use that 1.618 extension around 87K, which is just that all-time high to this low that we saw in July. That's the measured move. And then that 1.618 is right around 87. We need to close definitely on the weekly candle above all-time highs before we can even start thinking about those higher levels though. On Ethereum, pretty similar setup here. We've got this previous resistance acting as potential support. Now, one thing that I did add here was an anchored VWAP from this impulse candle here from October 27th. You can see that the price has respected this pretty well. Even though you do have some wicks below it, it has closed above this area multiple times since we did bounce off that support area. So this would be potential support below. It has to prove itself if we did break down. But for now, that anchored VWAP from that October 27th candle continues to hold pretty well. Same thing here. We've got this ascending triangle on the weekly. You'll see that we did poke our head a little bit above. We have a wick, so we always want to kind of dive in and see what's going on within that wick. And you'll see we actually have quite a bit of volume within that wick. So this is using the raindrop chart. And notice all of this volume at the top of the range. That tells us that for anybody selling above these all-time highs, there's somebody there to absorb the price. If there's absorb the supply. If there's nobody there to absorb those shares that are shares, coins, whatever you want to call them. Sorry, I'm used to talking about the market. Anyone there to absorb that supply, then the price would have to drop. But since you have this area here, it's kind of like a sponge. And I keep talking about this analogy because it's the only way I can really look at it. Assume that you've got some water, you've got a dry sponge. If you pour that water on a dry sponge, what happens? It kind of absorbs, it kind of gets bigger because that sponge is absorbing that water. And you can look at the water as supply on the market. You can look at that dry sponge as demand, conviction by buyers willing to absorb that water. Now, if you, and this bulge here at the top is kind of that sponge absorbing that and getting bigger. Now, if you have a sponge that's full of water already and fully full of water, I guess that's the only way to say it, that water is going to start dripping out of the bottom and gravity is going to take over. Same thing with the market. If you've got sellers dumping a supply on the market, shares, whatever market you're in, coins, the price is going to have to drop in order to find buyers. And you're not going to see a volume profile form up here unless you do have that conviction by buyers at the top of the range, which is what we're seeing in Ethereum, which tells me, this is a pretty strong setup going into next week. We'll have to see what happens, but all in all, this is what I call a balloon breakout. This is definitely the type of raindrop you want to see when you are breaking this type of horizontal resistance. So all in all, going into December, you actually have a 80% win rate since 2016. That's the furthest we can go back here for Coinbase for Ethereum. But you can see here that it's actually a pretty strong December for Ethereum looking back over the last 5 years. Now, going into some individual names, we have quite a few. Not going to spend too much time on any individual name. But let's start with Tesla. And Tesla's a funny one. This thing has a mind of its own. Now, we have gone up very strongly. Not here to say that, Tesla especially is just going to continue to go straight up. But if you look at this over time, notice anytime we broke out through these horizontal levels, we have continued up for a lot longer than most people thought. Now, that doesn't mean that we can't have some consolidation. Notice that we've had consolidation here. We had some consolidation there. We had a little bit of consolidation here. And so just because this can go up higher doesn't mean that you can't consolidate and reset a little bit. So overall, this is just a measured move of A, B, and C averaged together. You'll see that if we took a rough average, that would put this around 2,400 over X amount of months. Don't know exactly how long it's going to take. But if you do look at the previous moves up, they've happened, within about 2 to 3 months. So just keep that in mind. If you look at the weekly chart, or if we even want to go to a monthly chart, I have the extensions here. The next 0.618 extension, which is the 2.618 extension, is at around 1480 to 1500. So using the extensions above, that would be your next target. Going into December, we have an 80% win rate. And November has a 67% win rate, so also relatively strong compared to some of the other months of the year. But just keep in mind, seasonality is on the long side here for Tesla. And if you want to go back further, maybe you want to go back since the IPO, you'll see here that November actually has a 75% win rate and December has a 64% win rate. Still two of the stronger months of the year if you're looking strictly at the seasonal statistics. Going into NEO, another EV play. We finally got above this anchored VWAP here. That's number one. That's kind of promising for next week. We finally broke out of this area, retested it on Friday, but this is the first time that we got above the July 1st anchored VWAP with a little bit of that offset. Remember, the offset is just simply looking at some of these previous wicks and taking into account those wicks with the VWAP. So notice here, if I just turn off the anchored VWAP here and I don't have any, percentage band, I don't have any margin of error. Notice you've got these wicks. You've got all of these wicks that didn't respect the anchored VWAP perfectly. So for me, the way that I can kind of take that margin of error into account and flexibility, I just add a percentage offset. Now in this case, you do have to do a little trial and error here, but you'll see this was right around 2% above the anchored VWAP is where most of these wicks topped out at. And so the fact that we finally got above this area, retested this area, acting as potential support, that is pretty strong going into the weeks ahead. On top of that, you also have this really nice symmetrical triangle forming on the monthly chart. You'll see here that November actually has a 100% win rate since the IPO. There's not a lot of data backing that. It's only about 3 years of data. So, I like to look at a little further out, 5 to 10 years to get a better view of the data after more time has gone by. But overall, November, definitely the strongest month of the year for NEO. And we do have this really, really nice symmetrical triangle forming. And if we break out, this could definitely be on its way to all-time highs. Next one that we'll look at is BLNK. This is definitely one of the infrastructure plays that you want to keep an eye on. They just came out with a statement saying they're going to pretty much allocate billions of dollars to create these charging stations across the country. And Blink Charging, it says it in the name. This is a charging company. They create charging stations and ways that you can charge your EVs. So keep an eye on this one. This is one that I do have a position in, full disclosure, just common stock. I initially played this spike on options, and then I was able to load up a little bit because I do think not only is the technical setup there, but you do have the fundamental play there as well. So if we do want to look at the weekly setup real quick, and we'll just get rid of the seasonality here for a second, at least, to make this a little bigger. You'll see here that pretty much the COVID low anchored VWAP was tested perfectly over the last several months. And once again, we bounced there and we finally broke out of this descending resistance. Notice the last couple times highlighted in these orange circles, the last time we broke out, we have moved up very, very quickly. So just keep in mind, for a lot of people that are thinking, oh, you know, this thing's already made a move. Historically speaking, this could just be getting started. And notice here, this breakout happened last year, almost the exact same time of year, October, November of 2020 versus November of 2021. So all in all, watch for the anchored VWAP above around 40 to 45. This also has one of those percentage offsets to take into account a little bit of that price action that didn't respect it perfectly. Now, if you do look at the seasonality here, going back, let's say since their IPO, you'll see November has a 50% win rate, December has a 33% win rate. Nothing too crazy there to keep to keep an eye on, other than the fact that you don't have a ton of months that have really strong seasonality. And once again, you only have about 3 years that have passed. We're in the 4th year now. So just keep that in mind. Seasonality is something you always want to pay attention to, but you also want to look at the price action and the fundamentals that are surrounding whatever play you're looking at. And BLNK could be one that really benefits from this infrastructure plan. Next one is GE, another one that I think should be one that really, really does well with this infrastructure news. They also did really well on Friday due to the Pfizer pill. So, you know, people are likely going to be flying more. A big part of their business is aviation and engines and all that good stuff. But they also create things that would benefit from the infrastructure bill. And this is another play that I'm in for that reason. So my area above that I want to watch is really this previous high that we saw a week and a half ago from the earnings, which was around 111. If we break that, the previous high is around 115. But if you look at what's happened in the past, and this was pretty much the same exact time of the year last year. Let's anchor a volume by price from the May low. And you'll see we've got this huge ascending triangle. We've got the volume shelf. But notice here what also happened in November. We had this massive gap up after elections, which was kind of a status quo change in the market. Well, we have a status quo change in the market now over the weekend as well with the infrastructure bill. I personally would not be shocked to see this thing gap up over 10% on Monday. If it doesn't, great. I was wrong. I'm very open to being wrong. It's part of the game. But you do have to look at the price action and kind of see, okay, we're right at the top of this ascending triangle. We closed higher than last week's close. And we do have a lot of news backing this. We've got the volume shelf kind of creating that base for price to move up off of. So definitely keep GE on your list. Going into Boeing, another one that's likely going to do pretty well from this news. You'll see here if we do have the daily up first, we did break out of this descending resistance. So we finally closed above it. We wicked above it back in October, but we actually closed above it last week or this week, last trading week since it is Saturday. But anyways, we have the swing high anchor VWAP above using that the percentage band to kind of take into account this area here as well as this area here. So you'd really want to get above, let's say around 233 to 234 to really get this thing going. Now on the weekly chart, you'll see the same thing. We've got this really nice symmetrical triangle forming. We'd really need to break above this to get started. And so until we break above it, we are still trading within a pretty tight range. But if we do break this previous resistance and really break these previous highs here right around that, let's say 230 area, that's when things could really get interesting. So definitely keep BA on the watch list. LYFT is another one. This is likely going to benefit more from just the Pfizer news rather than the infrastructure bill. But all in all, we're right at this long-term resistance. You can see I'm using a zone rather than a trend line. And this is simply done by using the channel tool on TrendSpider. So all I'm doing is, if you wanted to create a channel, you'd be able to go in and essentially, create two of these areas, right? So this is kind of a regression channel, but you can also use it as a trend zone by simply I'll just draw it real quick. So I already have one here on my annotations that I've saved. Wick to wick, click, pull down. Now we have a trend zone. It's very easy to do on the platform and really can give you some flexibility around these levels. And this one's looking very similar to Boeing, just a really nice symmetrical triangle. And we'd really need to get above these, not only these previous horizontal levels above, right around, what is that? Right around 56.50 or so, but also that's right in line with that previous diagonal resistance. I know some people don't like using diagonal resistance, but all in all, it is a very strong thing to use. And you could even pull this back a little bit and extend this right. I would probably draw a zone here that's taking into account some of these wicks here. And so you'd really want to get above, let's say 58, 59 to really get going, which is right in line with that confluence of the diagonal resistance and the horizontal resistance there. So keep this one in mind for maybe a longer term setup, but a really strong week. Going into some of the weed names, we'll go into GRWG. I do have this one on a longer term side of things. It's not one that I actively am trading right now. I do have a long-term position though. And you can see here that the main thing that I'm looking at is one, we broke to the upside through this descending triangle. And if you look at the after hours price action, we definitely had a nice bounce to the upside. But the main thing that I'm watching here is the fact that we've got a really nice raindrop forming on the weekly chart with the falling wedge breakout. You can see a majority of that volume is at the top of the range. And that's showing that conviction by buyers willing to absorb that supply when it's being dumped on the market. And those buyers are absorbing that, kind of like that water in that dry sponge analogy. So that's GRWG. Weed names this time of year going into January do pretty well. So keep the weed names, especially this one, on your watch list. There's also a lot of ETFs. If you're more into the weed ETFs, there's a ton of those out there that should do pretty well too. MJ, MSOS, those types of things. So we'll quickly look at that one. MSOS is one that I did get a couple questions about, and you'll see here that we had a massive move to the upside, but keep in mind, we still do have this downward sloping resistance, and it's been tested multiple times. So until we really break that, things are still pretty much in a pretty strong downtrend, and we'd really need to break these previous highs to really get going here. So just an ETF idea for those that maybe don't want to play the individual names for marijuana stocks. Next one is Disney. Disney doing its thing, bouncing off horizontal support once again on Friday. And you'll see here that we did have a really nice move to the upside. And we actually still have a little bit of a gap here, right around 182 to 183. So keep that in mind. I think earnings is coming up next week, so that's another thing to keep in mind. But this one will also do really well from the Pfizer news. A lot more people are probably going to be going to the parks with that news. So all in all, you're getting close to the apex of the symmetrical triangle here, and we'd really want to get above. Honestly, I'd really want to get above like 187 here to really change the status quo. So this is around 187.15, 187.20, and until we break these wicks, it's really one of those things that's still just trading within a range. But I do have hope here, especially with the park news. But the parks are not their only source of revenue. Keep that in mind as well. They've got a lot of other ways to make money. Even if COVID did come back, they've got Disney Plus. They've got other fundamental variables in there that help the company. So we'll see what happens. But all in all, the important areas of support are holding for now. UPST is another one that is actually looking decent, but the problem is it looks decent until it doesn't. For me personally, it would stop looking decent if we broke this previous low around 310, but for now we are holding above it. if you anchor the volume by price from the swing low here that we saw back in July, we do have a really nice volume shelf forming here. You can see the swing high anchored view app did get tested on Tuesday, pulled back right to the volume shelf, and now possibly getting ready for a new leg up. On the weekly chart, you'll see that we kind of have this pennant forming and more or less a symmetrical triangle, but the reason I would call it a pennant is you do kind of have your flag here, pennant forming, and we'll see if we get that next continuation up for UPST. Next one is BIGC. This one's been off my watch list for quite some time, but we finally got the breakout, so that's something to keep in mind. If you anchor the volume by price from this swing high, you'll see that we closed well above this volume shelf. Now, a lot of the time you'll see something like this where you may kind of pull back or retest the volume shelf and continue up. We'll just see if that plays out in the same way. Now, on the longer term chart, we actually do have a pretty important breakout here. So if you're looking at the all-time highs and connecting that all-time high to some of these wicks down here from summer, you'll see that we finally did close above this zone. So that's something to keep in mind. If you anchor the volume by price from the all-time high candle, you'll see here that we do have a little bit of supply to get through, so that may, throw things off, at least the short term as the market digests some of that supply. But all in all, this is finally making a decent move. Amazon's the next one that we'll touch on. This one also made some moves. Now, keep in mind here, if you turn on the gap snake, which is just the automatic gap detection on TrendSpider, you'll see that we actually haven't fully filled this gap from the July 30th gap down. And so we do have a little bit of that gap above. If you want to create an alert whenever the gap finally fills, right click, create an alert at the line. And whenever the price breaks through that line, you'll be able to be alerted. Make sure you set your confirmation candle down to as low as possible so you get that alert as quickly as you can instead of waiting for that end of day daily confirmation candle. So all in all, a little bit of a pullback. This is where you want to pull up the raindrop chart and see what's going on. Notice that you've got a lot of that volume within the wick. So a lot of people look at a wick and they immediately think, okay, well, sellers came in into the close and pushed the price down. Well, when you have the raindrop showing that much volume within the wick, so I'll just put this line right in the middle of this wick, and then we'll turn on the raindrop so you can get an idea of where that volume is. Most of that volume is in the wick. To me, that tells us that aggressive buyers were coming in throughout the day. And once those aggressive buyers were done buying for the day, the price was able to pull back, not because sellers stepped in, but because that demand curve shifted back because those buyers were done. So anytime you have volume within the wick, that is generally a very strong sign. So, not only that, we have the longer term breakout here. So if we turn off the volume by price, look at the weekly chart. We are breaking out of some pretty important levels from the July highs, and we'll have to see what happens. All-time highs could be in play by the end of the year as the market, is hitting all-time highs. This is definitely a laggard. Going into NVIDIA, just absolutely insane move to the upside. You're in no man's land here. There's no previous price action to look at when you say look to the left. There is nothing to look at to the left. There's nothing there. We're at all-time highs. So this is when you want to pull out the fib extensions. The 3.618 extension is right around 321. Now, if you look at the monthly chart here, the diagonal resistance could even take us all the way up to the mid 300s here. So keep in mind that this thing is on an absolute ripper, and generally they continue to rip. And then you have to look at the lower levels, lower time frames to see maybe when the tide is turning. But for now, we just broke out of this horizontal level, this consolidation zone for about 4 months, and now we're finally starting to move higher. So this one's looking pretty strong, but I also wouldn't be shocked to see a little money flow out of this in the short term into some of those reopening names, as well as some of those infrastructure plays. Next one is Lucid. Definitely an EV name to keep an eye on. Same thing here. Here's a case study to kind of see how these things have played out. If we turn on the hollow candle and we look at kind of this wick here on Wednesday, and then you turn on the raindrop, you'll notice there was quite a bit of volume in that wick, a lot of volume at the top part of the range. And we've really we've really continued up nicely since then, hitting new highs from this previous move. Now, the main thing you want to keep an eye on is this gap above. Sometimes when you're using TrendSpider, the gap snake will do these weird kind of connections to the next gap. This is a big enough gap where all you need to do is go to the gap snake, put in a gap factor of 2, and this will actually only look at the larger gaps, which in this case is the gap way back from February, and that gap fills around 56. So the gap starts down here around 43. So remember, you can always just right click this bottom part, create an alert. Whenever the price starts to fill the gap, you'll get alerted on your phone or your email. So all in all, nice bull flag, looking very strong into the week ahead. We had this highest monthly close last month, and now we're actually breaking that this month. If you look at the weekly, same thing, just a little bit of a smaller time scale. Almost closing near the high of the week is never a bearish sign. So LCID, Lucid, looking pretty strong into the week ahead. Next one is FCEL, Fuel Cell Energy. This is one that's really interesting because it moves very quickly when it does move. So if we were simply looking at some of the other times that the price has really made some moves to the upside, what I've done is I've kind of just taken the average of these other moves highlighted in orange. And, if that's the case, that would put FCEL in the 20s or 30s relatively quickly, assuming we had this type of move. Doesn't have to happen, but you always want to look at previous price action. You want to look at the current state of the markets. EVs are hot. Anything around EVs are hot, and keep that in mind. Now, on the longer term side of things, these areas highlighted in green, if we simply just highlighted that area, kind of took the average again, the 1.618 extension is around 44 to 45. So, let's keep that in mind, but don't be married to it. You always have to look at price action first and then kind of go from there. There are plenty of other levels that you want to watch before that. You've got this level here above right around 1240. If you anchor VWAP from this high, we pretty much moved right up to it this week. So that's another level that we'd want to get through before we start, thinking about quote unquote the moon, as a lot of people say with these big moves. So that's FCEL. Last one is FUBO. This is one that has earnings coming into the week ahead. So keep that in mind. Now let's look at this ascending triangle that's forming. We pretty much got rejected right at this resistance once again. One thing that I'll point out here is this is doing pretty well. What people may look at this as a streaming service. They may look at it as more of a sports gambling since they just had their sports book. But all in all, this is doing a lot better than your pins and your DKNGs of the world over the last couple of weeks. Main thing that I'd be looking at is the gap above. But if we did get a pullback, we could pull back all the way to this green shaded area in the upper 20s and 30s again. If you've been in the stock long enough, that's deja vu a lot of the time. But who knows? This time could be different. We do have this longer term breakout on the weekly. So if we do use the volume by price here, looking at the volume by price since the 2019 low, you'll see that we're finally above this volume shelf. If you look at the monthly, this is what we touched on last week. This is starting to play out pretty nicely, breaking out of this longer term bull flag here. And same thing that we kind of did with Tesla. The average of A and B moves would put this, in the 80s to 90s. But you have to take price action into account. This is a measured move. It's not a guarantee. It's simply taking these previous moves and applying it to a similar setup that is currently happening. So everybody be responsible out there. Take responsibility for anything you do. Use all of this information as another perspective in the market in a way that you can use TrendSpider in multiple different ways. We touched on the gap snake. We touched on raindrops, anchor VWAP bands, volume by price, seasonality. There's a ton of different ways you can use the platform. And hopefully this video was not only informative going into the week ahead, but also how you can use the platform to get an edge in the market. If you enjoy these videos, please like and subscribe. And hopefully everybody has a great weekend and a great trading week ahead.